Hey, and welcome to another video here at Fiscal Voyage. And today we're going to talk about Apple. I actually use Apple product. I have a MacBook Pro, and I love it. And so with that, we're going to talk about Apple, the company, and determine if the stock is a buy, hold, or sell in a 5-minute stock analysis. Coming right up. Okay, let's start with the 5-minute stock analysis on Apple Incorporated, which could be found in New York Stock Exchange as AAPL. Apple, as you guys know, is an American multinational technology company that designs, develops, and sells consumer electronics, computer software, and online services. It is considered one of the big four tech companies along with Amazon, Google, and Facebook. Some of the company's hardware products include the iPhones, iPad, the Mac personal computer, the iPod portable media player, and the Apple Watch, to name a few. And I'm sure we all know someone who owns some sort of Apple product or services. So let's look at some of the fundamentals. Apple actually announced fiscal years ending on September. So they actually ended their fiscal year 2019. So we're looking at the time period of 2010 to 2019. Revenue grew at a compound rate of 16.62%, which is outstanding. And net income grew basically at the same rate, 16%. They currently have a credit rating of AA plus, which is great investment grade company, and operating income in that same time period came in at 14.85%. The big thing here is that earnings grew at a whopping 33.21%, which is tremendous. I haven't seen a company grow earnings like that in any of these analysis videos I've done so far. So that's great. However, the revenue 5-year average has decreased from the 16 for the past 10 years percent to now 7%, 7.31%, and net operating income 5-year average at 4.02%. And earnings has decreased also for the 5-year average of 13.01. Let's look at some more fundamentals. For the 2019 fiscal year, Apple announced $11.89 in adjusted earnings. Net margin came in at 21.24%, which is a little lower than 2018 of 22.41. Their debt to cap ratio is 46%, which is decent. And they currently have a pretty low dividend yield of 1.18%. They do have a 5-year average of 1.64%, so the current yield is much lower than their 5-year average. Their most recent dividend increase came in April, which was 5.5%. However, they only been growing dividends for the past 7 years. So, this, I see them continue growing dividends. Actually, I think they'll be growing it between 5 to 10% going forward, but we'll see. And they have a charter rule of 12, which is right at the mark of where I like to see companies 12 or higher for the charter rule, which is basically the dividend yield plus the 5-year dividend growth rate. So let's look at their future outlook for 2020. Fiscal year 2020, they're expected to earn $13.03, which is higher than the $11.89 they made for 2019. And 2021, $14.75. So earnings are projected to continue to grow. CFRA projects a 10% 3-year earnings growth average. Currently, they have a PE of 21.9 based on the 2019 earnings of $11.89, and they have a forward PE of 19.9, so that is good. However, the company has a 5-year PE average of about 16.20, so it is overvalued based on this matrix. So let's look at the fast graphs. As you can see here, the black line represents the monthly closing price, the blue is our normal PE, and the orange is the calculated earnings based on PE of 15. You can see the black line is way above the both blue and orange line. So based on this graphs, we can see that the stock is overvalued. So let's see exactly how far overvalued the company is. CFRA projects a fair value at 191, Morningstar at 220, Simply Wire at 190, Fast Graph at basically 200, Yahoo at 256, and my dividend discount analysis at 175. Averaging out the 6, we get a fair value price of $205.63. Currently, you could get Apple shares for $260. So with that, we see that it's overvalued by almost 21%. So therefore, I recommend it as a hold. I'm not selling this stock because I continue to see earnings growing. However, I'm not buying at this price. I currently don't hold Apple. I've had opportunities to buy it at a discounted rate. However, I never liked the yield because it's always been 1.5 and 1.8%. I like to see company as around 3.5, 4 or higher. But overall, I will own it eventually. I use their products. I have like I said, MacBook Pro. I love it, and so that's why I recommend it as a whole, because right now it's overvalued. If I owned it currently, I just hold it. I won't sell it, and whenever it drops under the my fair value estimate, that's when I'll start buying. So with that, thank you for watching. And if you have another company you would like to see, please leave a comment. Let me know which one you would like me to analyze next. So if you find this video informative, please hit the like button and subscribe to my channel for more videos like this. And also my portfolio could be found in the description, and which is on my website, fiscalvoice.com. Thanks again, guys.